Are you ready?
I am ready.
Okay. Well, good morning. I'm Roz Lewis, President and CEO of the Greater Women's Business Council, and we want to welcome you to our second season of our webinar series, Maintaining the Health of Your Business. So our organization is a regional partner organization of the Women's Business Enterprise National Council, and we certify women businesses in the states of Georgia, North Carolina, and South Carolina, where we have over 1,100 certified women businesses. And so our staff, committees, and board of directors are committed to bringing you information to assist you with growing your business and creating a healthy environment as you continue to maintain as well as manage, through these challenging times. And I want to say Happy New Year. I know it's February and you probably hearing it all along, but still, after last year, we need to say Happy New Year. So I want to welcome you because today's subject is one that every business should know the facts and where to find the money. It is what you need to know about the second round of the Paycheck Protection Program loans. And so we are going to have some very exciting guests with us today to share this information with you. They are experts in their field, and we hope that you will make the right decision about applying for this forgivable loan as long as you meet the criteria through the SBA, the Small Business Administration. And so we have with us today is Terri Denison of the Small Business Administration, and I'm going to talk a little bit more about her in a minute, and Ruth Whatley of ACE Loans. And so that's a community development financial institution and women's business development center. So now to hear a little bit more about their backgrounds, Terri is the Georgia District Director of the U.S. Small Business Administration. And in her role since May of 2002, she is responsible for overseeing the implementation of SBA's financial counseling, training, and business development programs for small businesses throughout Georgia. She has received numerous recognitions, including the Atlanta Business League, Georgia Hispanic Chamber of Commerce, Georgia Micro Enterprise Network, Greater Atlanta Economic Alliance, Atlanta Business Chronicle, and Who's Who in Black Atlanta. And she's a native of Corpus Christi, Texas. And she holds a BA degree in American Government from Cornell University and a master's in Urban Studies from Trinity University in San Antonio, Texas. She is also a graduate of the Federal Executive Institute in Charlottesville, Virginia. And in her spare time, I don't know where she has that, but I do know one thing she does, and that is ballroom dancing. And yeah, she does theater and travel, competitive ballroom dancing at that. So now let's talk about Ruth Ann. Ruth Ann Whatley is an energetic, dynamic, and instrumental team member at the Access to Capital for Entrepreneurs, which is acronym ACE, which is a nonprofit organization that helps undeserved business owners grow their businesses through capital, coaching, and connections. She serves the office of the president and as corporate secretary to the governing board of directors. She currently manages the Paycheck Protection Program, where last year ACE was able to assist small business owners with over $4.5 million in funding. Congratulations. And prior to working with ACE, she was finance manager for MIS Solutions, and she held various positions throughout her career with a primary focus on client service and accounting. She worked in the financial industry for over 20 years, including Invesco, other management firms, and investment brokers. She attended Tift College and Georgia State University, majoring in mathematics and accounting. She also enjoys travel with her husband and spending time with her grandchildren. Okay. Didn't think you were old enough to have grandchildren, but all right. So please welcome Terri and Ruth Ann with a round of virtual applause.
Thank you. Okay.
Good morning, everyone. You hear me fine? Great.
Yes.
I have a few slides to share with you to kind of give you an overview, focusing primarily on the latest round of PPP, Paycheck Protection Program loans. So that's where I'm going to spend most of my time, but I'm also going to just list out at the end some of the other assistance that is available to help businesses obtain some level of relief from the impact of the pandemic on their businesses. Of course, this is the obligatory disclaimer that legal had us put on this PowerPoint that they prepared, basically saying this is for informational purposes only, and if there's a conflict between this presentation and the official guidance wins out. Next slide, please. This is just a quick timeline of the implementation of the Paycheck Protection Program this round. And really the main point of this slide is to kind of focus on the fact that one of the feedbacks or most common feedback we got from the first go around of PPP is that questions as to whether the smallest of small businesses received their fair share or sufficient percentage of the PPP availability. We've all seen the news articles, media information, et cetera. So the Economic Aid Act, which created this last round, or this current round of PPP, really tried to focus on addressing that, and SBA in terms of implementing that legislation. So basically, we started accepting applications in our portal, and keep in mind, we're not the direct lender on PPP loans. Kind of like with our guaranteed loan model, you submit the application to the lender submits the application to us for a guarantee on the loan. So the PPP works similarly. So we opened our portal to receive those applications from the lenders on January 11th, giving priority to what we call the community financial institutions, which are your more, I guess, mission-oriented, often nonprofit lending institutions such as CDFIs, Community Development Financial Institutions, which ACE is one, as well as one of our microloan intermediaries, and minority deposit institutions and SBA certified development companies. The idea was basically to give them pretty much the first week of PPP availability, the opportunity to submit their applications and have those applications finally approved by SBA. Then they added in smaller lenders like your small institutions, 1 billion in assets and under, and then opened it up to everyone else on January 19th. So the idea being that those community financial institutions do tend to target a lot of what we consider our underserved target markets, women-owned businesses, minority-owned businesses, veterans, rural, et cetera. Also, just kind of for informational purposes, the monies that were set aside to support PPP program this round, 15 billion was set aside exclusively for those types of institutions. Now that isn't limiting them to that amount, but the idea that they would be guaranteed at least 15 billion of the overall allocated amount. Also, SBA, just as they did when they rolled out this round of PPP, giving exclusivity to the system by these institutions, we may, from time to time, monitoring where the applications are coming from, may create similar opportunities where maybe for a 24-hour period or 48-hour period, we'll reserve it just for those institutions. Next slide, please. Okay. So in this round of PPP, you're going to hear a couple terms or references to it. You have first draw loans and second draw PPP loans. And I'm going to touch on each of those. The first draw PPP loans are basically loans that would go to borrowers that did not receive PPP loans in the first go around, prior to August 9th of 2020. The basic formula would be the average monthly payroll cost times 2.5% as it was before. And then if you also as a borrower received an economic injury disaster loan or an EIDL in the time frame on the slide, January 31st to April 3rd, then you would include that amount in your request, because the idea is you would take out the EIDL loan, which is a higher interest rate and doesn't have the potential to be forgiven. You'd want to take that out with the PPP loan. There's also some additional entities that have been added to eligibility. Of course, basically your small businesses, 501c3s were eligible, including faith-based and organizations and churches. They've added some additional entities that are eligible, and I will hit on those on the next slide or two, I believe. Also, the types of expenses that are covered under PPP has been expanded as well. And so I'll touch on that. In terms of you hear the term covered period as it relates to PPP. And basically, that's the period of time for which you're going to cover various expenses that are eligible under PPP with those PPP loan proceeds. In the first round, it initially was 8 weeks for everybody. People were saying, well, of course, we didn't think this would go on as long as it had. So it seemed okay, 8 weeks at the time. As things progressed and looked like this was going to be impacting us for a while, there was obviously a need to expand it. So they expanded the period, the covered period, 24 weeks for everyone. A lot of businesses are like, well, why does it have to be one or the other? Maybe for my business and my situation, I need a little more flexibility. So basically, they've built that into this round of PPP. So you basically have between 8 to 24 weeks, you establish what that covered period is for your business. There's a few instances where a business may be able to, if they did get an original, PPP loan back in the first round, that they can actually increase that. But that's a very limited set of situations. For example, if you have a partnership and maybe the partner did not include their compensation. They included the employees, but not theirs. So this is kind of an opportunity for them to correct that. Or for seasonal businesses, there was a little convoluted and a little unclear exactly the formulas for that to calculate your loan amount. Now they've come up with a pretty basic formula that in most cases are going to give businesses a higher eligible PPP loan amount. So those are just some examples of those situations where they can actually get the loan that they got increased. But for the most part, if you didn't have a loan before, you'd fall in this category. The main thing to remember is you need to have, it says here, apply on or before March 31st. I would say apply to your lender sooner is obviously better than later, because I think probably what we did last time, and I'm thinking this is how we'll interpret it this time, SBA need to have approved it by March 31st. So you'd want to back up that period of time in terms of when you submit the loan application with the lender, give them time to do whatever they need to do, get it to SBA and give us time to do what we need to do. So I would work backwards from March 31st, not submit it to the lender on March 31st, just to be on the safe side. Next slide. Okay, and these are where I mentioned they've expanded the entities that are eligible. The ones on the bottom were the original entities, the majority of which are going to be your businesses, but there's other entities that were eligible. They've added housing cooperatives, so actually co-ops, HOA, homeowners associations, condominiums, associations are eligible. Destination marketing, that's not marketing businesses. I've gotten that a lot. It's basically like your tourist bureaus and visitors bureaus, those types of entities. One that I'm sure these organizations are very glad got added in this time are your 501c6s, so your business organizations such as chambers of commerce, and in some cases, certain news organizations. Next slide. Okay. What is a second draw PPP loan? Well, basically, this is for people who got a PPP loan previously, but they have additional need based on their situation. So the business has to have no more than 300 employees, which the vast majority of businesses are well below that. And they also have to have incurred a 25% minimum reduction in their gross receipts. So the formula is basically the same as it would be for the first draw loans, with no mention of idle in this calculation. And the loans can be up to $2 million. And it's based on your average monthly, either 2019 or 2020 payroll cost. In this act, with the second draw, what they really want to do is really work with those businesses in those industries that were exceptionally hard hit, such as those in the accommodation and food services industry. If you're familiar with NAICS codes, North American Industrial Classification System codes, any code that starts with 72 falls in that category. They get a little bump up in terms of their maximum PPP loan amount, and that you multiply by 3.5 versus 2.5, the average monthly payroll cost. Okay, and they would submit the application on the form 2483 SD for second draw or some equivalent thereof. Next slide, please. Okay. So obviously, but I guess they wanted us to be doubly clear. This if you had to have had a first draw. Wow, shocking, right? PPP loan to get a second draw. So the additional criteria, of course, other than that, is that you either have used all the proceeds from that first draw PPP loan, or you're going to use those proceeds before the second draw loan is dispersed. And so probably if you haven't quite gotten there yet, probably in your conversation with the lender, you would show that, okay, based on the rate of expenditure and what I have coming up, I estimate that I'll be done by this date, and then the lender could disperse accordingly. Okay. Once again, no more than 300 employees. And then you have to show at least a 25% reduction in your gross receipts. And you have to use comparable calendar quarters in 2019 and 2020. And emphasis on calendar quarters. So, for example, your second quarter, if you use second quarter 19 as your reference, you'd be looking as the comparison, what happened that same quarter in 2020. Now, it doesn't tell you which quarter. So, look at your patterns and, pick the quarter that's going to make the best case, obviously, for you and your situation so that you can maximize the opportunity with this second draw loan. Next slide, please. Okay. PPP forgiveness, there are some changes that have been made from the first round, which are good. Well, for the lender, they don't have to deduct the idle advances or the grant. You remember there was the up to 10,000 advance. And prior to this recent act, the lender had to take that out of the forgiveness payment or deduct it, which they weren't happy with, but they get to keep that now. But more importantly for the business owners and the borrowers, this recent legislation confirmed that the PPP loan forgiveness is not taxable income. Normally with RAS, if there is a debt obligation that has been forgiven, either in full or in part, that forgiven portion or charged off portion, if it's a distressed situation on the loan, for example, would be considered windfall income. And you would get a 1099 for that amount because it was money that you did owe that you no longer owe. I know that's a little tricky logic there, but that was the case. That was obviously not the intent of Congress with the CARES Act and the PPP forgiveness, but there was some question as to whether it would be applicable, those rules. So in the statute, most recent statute, they clarified definitely not taxable. Okay, so there's no doubt. Also, IRS had taken the position that if you received a PPP loan that was ultimately forgiven to cover expenses, that are designated under the PPP, then you could not then take those same expenses and deduct them on your business tax returns. I don't know if it was kind of seen as a form of double dipping, but that was the position they took. So the statute just passed said, nope, that's not going to be the case. So you can go ahead and deduct those expenses on your tax returns for your business as you would. And then they really simplified the application process for forgiveness for loans under 150,000 and under. Under the first round, there were several different variations of forms as we were trying to come up with, as an agency, with a good balance between the information needed and not being too burdensome for the borrower. But specifically, the statute just passed said you got to come up with a simplified form for 150 and under. So I think in Georgia, we were like about 90% with loans 150 and under. So I think it's a page and a half application. Not really any calculations. So much simpler. Next slide. Okay, and basically this is, what you do now, start with your lender of record. That's what I always say. And see if they are participating in the PPP. And pretty much everybody is. If you don't have a lender, we do have a tool on our website at sba.gov that called Lender Match that can help you find a participating lender. And keep in mind, some of this policy is evolving and procedures are. So the best place to kind of bookmark and kind of go back to as you need is the sba.gov/PPP. And all things PPP are at that website. And if you need additional assistance, we have our resource partners that can help. I know, for example, SBDCs have been very helpful with doing webinars such as these, as well as working with prospective applicants. So you can find out more about that on our website as well. And at the bottom there is how you can contact the Georgia District Office, our phone number, our general mailbox, and our Twitter handle, if you care to follow us on Twitter, because we are trying to get information out in bite-sized pieces using that medium as well. Next slide. Okay, and I'm going to just hit on these briefly. These are some other things that are available through our agency to help businesses with COVID-19 relief. If you're an existing SBA borrower through our 7A program, our 504 loan program, or microloan, there is SBA debt relief where payments are actually covered. We had this under the CARES Act 6 months principal and interest and fee payments for existing borrowers. They have extended that under the Economic Aid Act. Everybody that received those payments previously would get an additional 3 months for certain. And then if you are in, once again, the industry classification 72, the food and accommodations, then you would get an additional 5 months up to the end of the federal fiscal year, which is September 30. A lot of our existing programs on the regular side of SBA, the programs I just mentioned, like 7A and 504, they've increased the guarantee for the 7A program. Normally it's a maximum of 75% for loans 150 and over. It's now 90%. So of course that helps the lenders be more accepting or interested in maybe making those loans that maybe they wouldn't under with a 75% guarantee because they're only on the hook 10%. Our SBA Express normally has a 50% guarantee. It's up to 75%, and the maximum, which is normally 350, is now $1 million. They did this under the CARES Act, and that was extended through the end of our fiscal year. So those are some existing SBA programs that you can, that have some little tweaks that you could take advantage of right now. The shuttered venue operators grants, that's something under this latest legislation. And it's basically for those who operate like live performance venues, movie theaters, playhouses, etc. And I'm not going to go into the details, but that since those types of entities, once again, were very hard hit by the situation, this is something that was created for them. We still have the EIDLs, the economic injury disaster loans, and those will be available through calendar year 2020 or as funds remain. Generally, those loans are being capped out at 150 for this purpose. It is possible if you had an EIDL loan that was previously that was less than 150, you can go and get an increase. But other than that, you probably will not get an increase above the 150. And then the targeted EIDL grants, I only mention it because it's in the legislation. People may have heard about it, but generally the emphasis is on the word targeted. It's not an open application process as before. Under the CARES Act, we had the EIDL grants, which we termed advances. And the idea was it was supposed to be an advance on the EIDL loan, and you wouldn't have to repay it. Still, this particular targeted grant is going to go back and look at those individuals who did not get 10,000. The statute said up to 10,000, but there was a lot of debate about the statute says 10,000. We should have got 10,000. Some members of Congress, we intended it to be a flat 10,000. Well, the language didn't reflect that, so they're kind of using this to make up for that. So they're going to go with people who received the grant originally, but didn't get the 10,000, and then those who were in line had an application in, but the funds ran out on July 11th. The extra caveat is that the business has to be located in a low income area. So if you weren't before, they're not going to make you give the money back, but you just would not be able to take advantage of this grant. And the amount of money given and the amount of people in those first two categories will probably take out the entire allocation. So very unlikely that it will be opened up for new applicants, but just wanted to kind of touch on that was the situation with that. And I believe that is my last slide.
Well, I think that's it. And Terri, let's just see. Yes, so thank you so much. I know it seems like it's a lot of information to digest. It's great that we have our guest that we have today, because we do have some questions. I have some questions I want to ask just to do some clarity on it, but I want to thank you for providing that information because it is valuable. Hopefully, our audience is going to take advantage of these. And I think one of the key things I heard was don't wait till March 31st to apply, right? Don't wait to the last minute. And I think amen almost from Ruth Ann on that one, you know.
Amen.
Wait until the last minute on it. So one of the questions I want to ask, you know, and you know, of doing this, and Ruth Ann, can you just share with us just a little bit about what's happening at Ace Loan and what is the traffic that you're seeing right now with these applications, so people can kind of have a sense, you know, of what to expect?
Sure. We first opened our portal on January 11th, and by the 4th day, the response was so fantastic. We closed our PPP portal because we wanted to make sure that we were able to help, you know, everyone who had applied. So we had to pause applications. What we did in the meantime is we have formed a partnership with Lindustry, who's also a CDFI, and they're national and they're also very high technology. So we are working on our applications. And we are also working with Lindustry to process new applications. So we kind of have two pipelines going right now. I certainly agree on that. Don't wait till the end. It looks like it's taken 2 to 3 weeks for even the most simple application to get through just from the sheer volume. I saw another CDFI email come in yesterday. They paused their applications as well. You know, I think what I would say is to be very, very patient with your application. Get right back to them when they ask you for another document to support some of your numbers. We've currently funded 1.2 million, but you know, we have another almost 4 million in the pipeline that we're going back and forth asking for, you know, corrected documents and things. I do have a short presentation just to give them some tips on boots on the ground, what I can tell you will make their application go faster through the process if you wanted me to go through that.
Okay, that would be great. And do you have access in order to share?
Yes, I think so. Hold on just a moment.
Okay,
oh,
perfect.
She's disabled it, so let's get Sherelle to let me use screen share. Sherelle, will you let me share my screen, please? There we go. Oh, I think I'm sharing this. Hold on.
Almost, not yet.
No, not yet. Well, just a moment.
Well, while Ruth Ann is working on, did you get it?
Yeah, I have it up. Let me see if I can.
While she's working on that, I have another question, and Terri, you can answer this question because I got this yesterday. And it is, there's some companies, believe it or not, they've expanded their businesses. They started a new business last year, believe it or not, in the middle of the pandemic. And so their question is, can they qualify and apply PPP loan?
They have to by under the CARES Act, and it was extended to the Economic Aid Act, is that they have to have been in business as of February 15th, 2020.
Okay.
So if they weren't in existence before then they automatically are not. Then if they are relatively new in that they started at that time or sometime thereafter, then there are some things that some formulas that can be worked through to see what they would get.
Okay. Wow. Well, that's good to know. And I'll be able to let this person know that, believe it or not, I think they actually expanded or started 2 more businesses during the pandemic, which is great for them. But, you know, now that they have employees, I guess they hired during that period of time, is whether or not they will be able to qualify for the PPP.
Right, because that's the
Date.
payroll drives it, yeah.
Right.
But we do have our regular SBA programs with those enhancements that I mentioned. So it may
Okay.
be that they could take advantage of those.
Okay. I will let them know as well. And
Are
we'll
you
put
able to
that
see my
information
screen now,
out.
Ross?
You do?
Are you able to see my screen?
No, not yet.
No,
Nope.
it just must not be working. That's okay. I can just go through it as I'm going, if that's all right.
Okay.
First, I want to just take a minute to tell everyone about ACE, because I think every business in Georgia should know about ACE. We're a nonprofit organization. We've been around about 20 years. And as a CDFI, we help start and grow small businesses. Our mission is to provide community development to underserved people and communities. We serve entrepreneurs who are typically not financed by traditional lenders. As I said, we've been around 21 years and we provided over $97 million in loans and business advisory services. And we've supported over 1,400 small business owners. And we've helped create or save over 12,000 jobs in Georgia.
Wow.
Currently, we have offices in Cleveland, Georgia, Atlanta, Norcross, and we've recently opened Dalton and Rome. We're excited to share with everyone this morning that we have a second location of our Women's Business Center opening up in the wonderful city of Savannah very soon. So we currently have the Women's Business Center in Norcross, which serves all of Metro Atlanta, and then we'll be opening in Savannah soon.
Wow.
The Women's Business Center is a resource partner of the SBA, and they provide a full range of services for entrepreneurs in all stages of planning, implementation, and growth. We have educational resources, webinars, and software to help sustain and grow your business. So last year, we participated in the Paycheck Protection Program and funded over 170 loans for $4.5 million, and we reached over 30 counties in Georgia. And you know, because I'm in the trenches actually processing these applications and things, I wanted just to give you some tips. I know you're getting a lot of the SBA formal presentations, but I've seen a lot of applications come through, you know, with errors and different things. So I just wanted to kind of tell you, if you haven't started your PPP process, these tips will help your application flow down the filter and get approved more quickly. And some of them are just very, very common sense, but I've seen so many people not even, you know, think about it or do these things. First of all, read the instructions from your lender, especially like your online applications. Thoroughly read those instructions, find out what they're requiring, what their process is, so that you're familiar before you sit down at your computer. That makes it a lot less confusing for you and you're prepared. Next, usually they all have a list of documents for your organization type. And if you'll pull that and print it out and check them off, get them all ready on your computer, because you're going to have to upload them to the lender. You know, you do have to provide that supporting documentation in addition to your application. So it's best if you have your driver's license copied and put on your computer along with bank statements, your 941s. Just make sure that you have that entire list, everything that they are asking for that's applicable to you, ready on your computer. Trust me, that means the difference between spending 30 minutes doing your PPP application at the computer or making it a terrible experience and going back and forth spending 2 or 3 hours. My next one is learn about the calculation for your entity type. If you don't know anything about what you're doing, you're not going to know how much PPP to ask for, and you're going to ask for the wrong amount. And that's going to get you caught in a back and forth with the lender, which takes days and days and will result in the 2 to 3 week shuffle to get you completely through the process. The SBA has, several different releases, how to calculate first draw PPP loans. It's on their site. You can Google it. I also have a PDF I can send out to everyone with links and these tips. They also have one called second draw PP loans, how to calculate the revenue reduction and your maximum loan amount. So those are helpful. And, if you have a specific question, Google. But what I'm stressing here is that preparation and documentation are key to getting approved quickly and getting through the process. Another thing I've seen is so many applications come through without their NAICS code. If you don't know it, you've probably had to put it on your taxes previously. You've had to use it on other documents, but I have a link as well so that you can look it up, because you need to have it on your application. ACE as a lender will send your application back to you so that you have to complete that. And you could lose a day going back and forth just for one blank NAICS code cell. Also, if you're the owner of any other business or you have common management with any other business, be sure to complete and include Addendum A. This is another item where we are having to send emails back and forth, wait to get the Addendum A, and then we move the application on through the process. Also, on the first draw application, if you have an idle and you answer yes to question 4, there's an Addendum B. So be sure to read the application and make sure you're providing the extra addendums that are needed when you put your application in. That will save, if you have to go back and forth for each one of these things, that's like 3 or 4 days now where you've had to go back and forth. Double check for typos. When you fill out that SBA application, make sure your EIN number is correct. Make sure your email is correct. I've had several people send me 20 emails. They're not getting correspondence. They're not getting a status. Well, they left the R out of their email, so it's not even going to their email address. Make sure you get the amounts right. If you mistype the amount that you are asking for and it doesn't tie to the documentation, it's coming back to you. On both the first and second draw application, on the very first page, the first draw is question 5 and 6. On the second draw application, it's questions 4 and 5. And there's little places where you have to initial there. And I think over 80% of our applicants are missing those initials. And so we want you to be forgiven. So we want perfect documentation. We don't want the SBA coming back and saying, this is missing, this is missing. We're going to send that back to you just for initials on your application. As far as some errors that can really cost you money, in addition to time, double check your 941s and your 940s. If you have a payroll that you're submitting, the gross wages, make sure that your 941s, your 4 quarterly 941s total to your 940. What if you've forgotten about, you did an amendment earlier in the year? We want you to use the most accurate gross wages for your calculation as possible. So don't forget some money. Make sure everything adds up so that you can get the maximum loan amount. Also, there's some major components to the calculations, such as your Schedule C if you're a sole proprietor, or if you have people on W-2 payrolls, you're using those 941s for the gross payroll. If you're a partnership, you've got your K1s. But there are lots of add-ons that if you think about them and you take some effort, extra effort, you can get additional money if these apply to you. Group health insurance, life insurance, disability, vision, dental. Do you provide any of that for your employees? Take the time to pull the receipts, pull the proof, and add that into your calculation. Do you provide any employee contributions to retirement? Be sure to pull that as well. All of this adds up for more money to you to help sustain your business. Also, state and local taxes. For just a few more minutes of your time, you can get more money, and that makes such a big difference for your business. Again, reiterating, study the calculation, for your entity type. If you're a sole proprietor, your calculation is based on income from your Schedule C that's filed with your personal taxes. If line 31 on your Schedule C, however, is showing a loss, you're not eligible. And that's a sad situation. I've had to talk with lots of sole proprietors about that. But we're so fortunate we can offer them some other options. You know, the shuttered venue, they're looking into that. Last year, I was able to turn many people toward the pandemic unemployment, some things. So, but if you're a sole proprietor with employees, if line 31 is showing a loss, you can set that to 0 and not use that calculation and use your gross wages for your employees and still be able to calculate a PPP amount. So just as Terri was talking about, there are a lot of specialized calculations and things. So my advice would be to talk to someone at an SBDC, SCORE, a mentor that knows a lot about the PPP, your accountant, have them check into specific scenarios as far as if your work can be classified as seasonal. Also, very fortunate, you can now look at 2019 or 2020 for your base year calculation to see if you're going to get a bigger PPP loan using 2020. I think that the key here is talk to somebody who knows and learn about your calculation so you can get the best bang for your buck. For second draw applicants, I think you should consider applying with your first lender. Most of these lenders are requiring less documents for returning clients, and that can simplify your application by 10 to 15 documents. If that's not possible, then you probably still have some stuff pulled together from last year. And if you get the same amount PPP, then there's just a few more documents. I think before you even start putting any effort forth on your second PPP, make sure that you meet the 25% reduction in gross receipts. Because if you don't meet that, then you shouldn't even waste any time on your second draw PPP, and you should look for some alternatives. In the PDF that I'm not able to show you right now, I do have an eligibility determination that clarifies that question very clearly for you. I know it's a quarterly comparison from 2020 to 2019, the same quarter of each year. Some of our sole proprietors and businesses, they don't have, they're not using QuickBooks, they don't have an accountant. So if you need to do a year over year calculation, if you're down over 25% and can show it with your gross receipts, then we will take that year over year calculation, and that simplifies it, because many small businesses just don't have the capability to pull quarter over quarter. I do want to reiterate Terri's opportunity, SBA. If you received an EIDL loan between January 31st and April 3rd, please be sure to check that out. If you used any of those proceeds for payroll, that is such a great opportunity to have part or all of that EIDL loan forgiven by rolling it into your first PPP amount. I would definitely check with your accountant, because you're going to need to be able to document that, the receipts where you paid the payroll and then rolled it in, because it's, like she said, it's so much better to have part of that EIDL forgiven than end up owing it at 3.75%. Next, reach out to ACE. We have a PPP at aceloans.org email. I'm sure Terri and I both are going to be open to taking questions. We have our Women's Business Center that will be able to help you. Again, the SBDC. Get as much information as possible to make your application go as smoothly as possible. Thank you so much.
I went on mute. Thank you, Ruth Ann. That was great information. Hopefully people on this are really taking notes, but if not, just keep in mind, we will provide you a copy of this as we are recording, and we'll make sure that we get those slides that Ruth Ann has as well with the tips, because those were great tips. The one thing I heard focused on was making sure you wordsmith your application before you send it in, making sure your email is right, your NAIC code is correct. If you're certified WBE and you're trying to remember where your NAIC code is, you can always go to your certification because we document your NAIC codes as well regarding your business and your EIN number. So all of that information is there, you know, for you. So keep that in mind as well. Let's see, does it look like the SBA will run out of funds for those who are in the pipeline? That's one of the questions. I know that happened last year. So Terri, what do you think is going to happen this year?
Yeah, we've had our folks at Capital Access that oversees the Paycheck Protection Program at SBA in headquarters. They feel at the current rate of usage that we'll be okay with funds through the end of the period, you know, the March 31st. So, you know, unless there's a huge uptick in the burn rate, as we call it, we should be okay.
Okay. All right. I think I answered that question about sharing. Let's see. Oh, these are comments. These are basically comments. And Terri has also put her email address in the chat as well, in case you have any questions regarding, and I would take advantage of that, of having her email address, because it's almost as if you're getting personal service there, you know, regarding that. I think, though, I did have one other question that I wanted to, which I just went in. On the forgiveness loan, my question is, should sole proprietors, independent, how do they complete the forgiveness loan if they don't have any employees? And these are for sole proprietors, independent contractors, or self-employed individuals.
Well, actually, in the calculation for the loan itself, and Ruth Ann mentioned it, there's a, for each type of business format, there is a means or a formula for calculating what their payroll would be. So I think that, I can't remember on Schedule C, I think it's line 31.
It is. Mm-hmm.
That's the figure you would use. So if that's 60% of your expenses, you should be okay on that.
Do you have any comment, Ruth Ann, on that?
I think if you are a sole proprietor, and let's just say you get $2,500, I think you can, you know, just use all of that for your, to pay yourself. Just document it, you know, have it put into a separate account when you get the funding, and document that you're paying yourself for the 2.5 months or whatever.
Yeah.
You know, it really does provide to pay you for 2 months, with that additional 20% could be to help pay your rent, or, you know, or utilities, and the long list of things. But if you're a 1099 contractor or sole proprietor, you can just document that you're paying yourself throughout your period, and that will still work.
Yeah.
Okay, I'm trying to, okay, I see the one from Tina. I just got a text. So Tina, did you have another question about running out of, I know you saw running out of funds. And then of course you got comments from others, which we appreciate that. So thank you very much for the comments here too. Strongly encourage all to engage with your audit tax firm to help with this. It's a massive undertaking, and yes, it can be, depending upon how many employees you have. Understanding your 940 reports. If you don't have a payroll company, that's something I do highly encourage businesses to invest in. You know, when you think about it, I will tell you, even with this organization, when I started out, I was the first employee. I hired a payroll company to manage the payroll. And of course, we've grown since then, but it is well worth it. You think about what it costs in your time to manage payroll and do those things. And if possible, if it's not a bookkeeper or an accountant, or a CPA, although you should have one of those three, engaged and involved, to kind of help you. To Ruth Ann's point, it'll make life so much easier when you're applying, whether it's the PPP loan, whether it's the EIDL loan, whether it's the shutter venue loan, any of those offers, especially by SBA today, would be great. Here is from Teresa. I recently applied for a second draw PPP loan with my bank. This round, they are using a third party to process the applications. She said she applied for the same amount as the first round. My payroll is the same. I documented a 53% decline in gross revenues, with the largest decline of 81% occurring in Q4. Yet this third-party processor emailed me stating that I qualified for 18% less than my first draw and only 2 times the monthly payroll amount. Is there a reason that second round loan amounts would be reduced if all criteria are met?
First of all, it's really hard to be that specific without looking at your paperwork. But my first thought is that possibly there was an error on your amount last time, and this new processor has recalculated your amount, and they're showing that it didn't add up last time, and so they're revising the number. Or if that's not the case, I mean, I really think you should take it back to them and prove it. But so far, 100% of our people who've come back for a second one are getting that same amount. It's just making it so much easier because they've already submitted all the 2019 document, and then 2019 for the most part was a better year for most employers versus 2020. Right. We do have some of them that actually have a better year in 2020, but still qualify because they had that one quarter. They're able to show losses, that over 25% loss. So they're opting to choose 2020 as their base year and provide more documentation. So you have to decide, do I want to get the same amount as the year last year without that massive amount of documentation, or do I want to redo 2020 and get more money? So that it's a choice. But on this one, Teresa, unless we specifically look at your paperwork, I would either argue with them on this, showing them your calculation again, have someone else look at it, or check it to see that they made an error last time and they're just fixing it this time. What about you, Terri?
Yeah, that's what I was thinking too. That it may have been, because I know the first round, especially, guidance was kind of coming. As the airplane, like I said, we're bolting the airplane together as it was going down the runway. So, there could have been clarifications on how things are calculated that didn't exist maybe when you did the initial. But yeah, we'd have to really see what, the specifics to try to figure out what happened there.
Wow. Wow.
One thing I kind of forgot to mention, just as a quick reminder, and I referred to it and I didn't talk about it, other than the payroll, of course, you can cover your business rent, your mortgage interest on your building, and your utilities under the original CARES Act. They've added operational expenditures, so like for software and cloud related computing, damages, costs that weren't covered by insurance if you incurred them because of the civil unrest that occurred last year, supplier costs, so purchasing the things you need that are essential to the operation of the business, and then very importantly, the PPE and other adaptations that you had to make in order to comply with state and local safety and health ordinances. Those things can be the other expenses. That's the 40% that's not used on payroll and related expenses.
Wow, that is great, because that does help a lot of the businesses. And this is going towards the forgivable. Is that what you're referring to, meaning the
Right. You have,
qualifiers in order.
40% you can use for certain other non-payroll expenses. They basically expanded what the other category consists of.
Very good, very good. Well, I want to thank Ruth Ann of ACE Loans and Terri Denison of Small Business Administration for taking time out of your busy schedule to truly inform and educate our women businesses. One thing I will share with you last year, when you're right, as we were bolting the plane going down the runway for takeoff, I remember reaching out to Grace Frick at 6 p.m. in the evening saying, I have WBEs that need to get the PPP and apply for this loan. This is when an announcement was made that, they were stopping all applications with big box banks and only utilizing CDFIs and community banks. And ACE Loans came through where I was able to get that information out to the women businesses and they applied, so it was great. I asked, do you have any money? She said yes. And we were able to send women businesses your way. So thank you so much for being such a great partner for the Greater Women's Business Council too. And SBA Terri has been involved with our organization for years. So we're very excited to have SBA as that partner as well. So thank you all so much. One of the things I also want to thank are our sponsors. Sponsors have been the foundation of GWBC, and just think, especially through 2020, you know how important they are. And these are just a few of our sponsors. There'll be more added as we continue throughout the year of our maintaining the health of your business and our programs. And just for a few key announcements, the one thing I want to remind you of is that our second season of Mornings with GWBC, we started earlier on January 25th with the Federal Reserve Bank, and on February 8th at 10 a.m., we will have JE Done. So we ask that you register and tune in, because we're going to talk about what opportunities there are in the construction industry. So please visit our website at gwbc.org, click on events and register there, or check out the link in our newsletter that comes out on Wednesday. So we hope that you will sign up for this, for our Mornings with GWBC. It's only half an hour, so get your cup of coffee, your tea, or your spoon. Join us as our corporates engage you with what's happening. So until next time, we want to thank everyone for joining us today. Again, thank you, Terri and Ruth Ann.
You're welcome.
Happy early Friday, and have a good weekend. So please stay safe and healthy. Goodbye.
Take care.
Bye-bye. Thank you.